Yeah, anticipation is power, right? So using things like projections and scenario modeling to anticipate, where earnings are likely to go and what are the things you need to do to impact those earnings, right? Even though I have spent my entire life around numbers,
Yeah.
um, I will tell you that um, the most important part of any company is its people, right? And if you get that right, the numbers will manifest itself, right?
Okay.
The numbers in a means to an end. The end is the business performance.
Hello, everyone, and welcome back to the Lost Entrepreneur Podcast. I'm Sebastian Romero, the host, and today we have with us Juan Carlos Morales, the former Chief Financial Officer of BNY Mellon Wealth Management and State Street Global Advisors. He's currently the founder and managing partner of Surfside Capital Advisors, LLC, and the independent director of the Mass Development Corporation. Thank you for joining us today.
Thank you. Good to be here.
Before getting into what you do, I want to talk a little bit about your early life. So, did you have any hobbies or interests that pointed you towards a career in finance when you were younger?
I've always liked to understand how people make money, and my father was an accountant. So, I remember at an earlier age asking things like, what is a balance sheet or a profit and loss or margins, right?
Yeah.
And that sort of evolved into me having an interest back in Puerto Rico to go study accounting.
What do you think is one piece of advice that a mentor has given you that has been the most beneficial to you as a CFO?
Number one, uh, at the same time that you don't want analysis to paralyze action, right?
Yeah.
Because some people analyze things so many to the point that they don't take any action, right? And that's not healthy, right?
Yeah.
You also want to be out and methodical in decisions, as much data as possible, right?
Yeah.
So CFOs do not rush to conclusions. All right, good CFOs. That was a great piece of advice that I got, right?
Hmm.
The other piece of advice that I got is, which we apply today with our portfolio companies at Surfside Capital, right? Surfside Capital has a bunch of companies that we do business with, is strategy and capital without people doesn't work, right? So you may have the perfect strategy, perfect financials, right? Perfect capital base, right? But if you don't have the right people, the outcome, the business performance is not materialized,
Yeah.
right? So high performing companies need the right strategy, right? The
Yeah.
right capital, risk and capital base, resource management, and the right people to go ahead and execute, right?
Yeah.
Even though I have spent my entire life around numbers,
Yeah.
um, I will tell you that um, the most important part of any company is its people, right? And if you get that right, the numbers will manifest itself. Be transparent and direct when you're talking to either clients or staff or Wall Street. I think that's on top of being strategic, you have to be a great communicator, right? Because it doesn't matter how smart you are. I guess it matters, but smart is not gonna be enough. You have to be an excellent communicator. So, as a public company CFO in particular, you have to be transparent and clear and have a solid command uh, of not just the numbers on a historical basis, but the projections and the outlook and where things are going.
How do you plan where you want your projections to be at in, let's say, 5 years' time?
Yeah, so it's part of the strategic planning process. Typically you would get together with your management team and evaluate the market opportunities and your own product or solution that you're offering to that market, right? And a set of assumptions around, look, this type of product at this price will be purchased by this market, this segment, this geography, right?
Okay.
And it will be purchased because we would have a sales force, because we would have a marketing campaign, and everything that relates to the sales process and business development process, and that creates revenue projections, right?
Yeah.
That revenue has a cost, right? So there's inventory, there's overhead, there's um, servicing costs, right?
Yeah.
And you project that out, and out of all that discussion, what comes your profit estimates, right? And whatever capital requirements that you need to run that business, both monetary or human capital. Right?
For those that are listening in that don't know what a chief financial officer is, could you please give them a quick rundown of what a CFO
Yeah,
does?
sure.
Asset management
Yeah,
company.
so a CFO, it's the CEO makes most of the strategic decisions around people, client, culture, right?
Yeah.
The CFO is the lead advisor when it comes to the company's finances, and the finances are a manifestation of everything else that happens in the company, right? If you're in operations, you're going to have expenses. If you're in the sales department, you're going to have revenues. If you're in the HR or technology, you're going to have costs, right? Everything goes into the financial statements, right?
Yeah.
So a good CFO, fundamentally, those three or four things, right? They make sure that the and records are in accordance with generally accepted accounting principles, right? I'm a
Yeah.
CPA. I went to PricewaterhouseCoopers for 10 years, right?
Mhm.
A CFO also takes that information and uh, and put it into decision support tools, pricing analysis, profitability analysis, forecast, projections, stuff that has nothing to do with history, but with the future, right? Then take that information and communicate it to stakeholders. Stakeholders could be the board of directors, it could be the investor community, it could be Wall Street, it could be employees, right?
Yeah.
And then takes all the company's results and deals with external regulatory agencies, the IRS for taxes,
Mhm.
the SEC, or any other federal regulatory agency, uh, the external auditors, because in the capital markets, if you're a big company, you have to get audited financials. So there's an independent accounting firm that has to come overlook at your set of bookings record and make sure they're in good shape, right? The
Yeah.
CFO coordinates all that stuff. If there are changes in accounting policy because there's a new legislation, the CFO has to be on top of that stuff, right?
Yeah.
If they are, in order for those financials to be working, to be put together effectively, there have to be a system of internal controls, right? So CFO is ultimately responsible to make sure that there is an internal control structure that is reliable and will yield financial reporting that is accurate, right? So
Yeah.
it's a big job. Yeah.
Yeah, definitely. So, as a CFO, do you sometimes feel like you have to have this balance of not like when knowing like when you need to be focused just on the numbers and when to be focused on, let's say, like the company itself and what they're doing?
Yeah, good CFOs are always focused on both, right?
Okay.
The numbers in a means to an end. The end is the business performance,
Hmm.
right? So the numbers allow you to give informed recommendations to the CEO and the rest of the management team around where to invest, right?
Yeah.
If you want to invest in a new product or a new market, or we're going to go buy a company, right?
Yeah.
All that needs to be supported by financial analysis. That's where the CFO comes in, right?
Yeah.
Conversely, the CFO also advises where to disinvest in the events of a bankruptcy or a turnaround, right? Where if we need to let go people, how much, how many, when, where, what would be the impact on the financials, right?
Yeah.
Which products do we need to kill? Which divisions we need to shut down? Which companies? In our case, we had a company that owned a bunch of other companies, right? Which
Yeah.
companies do we need to exit and sell, right? So that entire that balance of risk and capital, right?
Yeah.
Because you want to do this in a very risk managed way, right?
Yeah.
It's the fundamental job of a good CFO.
Yeah. You're not a one man team. Yeah. And so going into that, how would you say is like, do you think that people are definitely the backbone of everything you do as a CFO and you can't do anything without them?
Yeah, that's right. I mean, I think that um, you have to have the right financial systems. You have to have the right processes, right? But people that runs those systems and the people that live those processes are human beings,
Yeah.
right? So if you have the perfect system and the perfect process, but a team that is not operating effectively because it doesn't have the right culture, or folks in the jobs don't have the right skill set, right?
Yeah.
It doesn't work, right?
Yeah.
So at the cornerstone of it all is it's um, it's organizational design, it's talent management. How do you recruit the best people? How do you pay them fairly? How do you keep them engaged and motivated? How do you advance their careers, right?
Yeah.
That's why people do great things, right?
To be one of those people, do you think that you have to be very um fluid in what you think and what you do? For example, that the stock market fluctuates a lot and that it's very fluid in the way it works. Do you think that those people have to analyze the stock market and be just as fluid as it?
um, in the investment management industry, which I operated in for many years, right? Um, um, it brings its own set of complexities around market volatility, right?
Yeah.
The CFO and the role of the CFO um, would be the same for a manufacturing company,
Yeah.
right, or a technology company. It has nothing to do uh, with the capital market volatility, right?
Okay. Yeah.
The implications of that in the CFO is, well, if you are in a financial services company, obviously that's going to impact your profit and loss, right?
Yeah.
If you're not in a financial services company, if you are in a regular company, call it, I don't know, a pizza shop, right?
Yeah.
Uh, you know, you have to keep an eye on things like returns, right? Like if you have stock and bonds in your retirement accounts, your employees' retirement accounts, that's going to get fluctuated, right? And
Yeah.
so that might create a little bit of anxiety with the employees, right?
Mm.
Uh, if you have a recession, right? Like we are allegedly on the cusp of, well, that's going to drive interest rates are going up, right? Your cost of borrowing goes up, right? So
Mm.
your credit card, your mortgages, your business loans, right?
Yeah.
That impacts the P&L, right? Um, but by and large, equity market volatility only affect those that have investment portfolios, right?
Yeah.
And those investment portfolios are typically balanced and designed to be performing long over the long term, right? So if you go into that space, you have
Mm.
to take the ups and downs, right?
Talking about recessions, how did you create a strategy for, let's say, the stock market crash of 2008, or let's say during the
Yeah, well,
pandemic?
that was unprecedented, right? That was like trying to plan for the Great Depression. But I have
Yeah,
been
you
through
can.
four recessions, and look, I actually put a video out there that it's on around what to do in uncertain times, like the ones that we were going through, right?
Yeah.
And the most important thing you can do is understanding your cash flows, right? Making sure you have, to the extent that you have reserves, that you start putting them to work effectively, right?
Yeah.
Once you understand your cash flows, you need to do scenario modeling. What if this happens? What if this happens? You don't want to be surprised, right?
Yeah.
Uh, and, and frankly, recessions affect demand, and good CFOs know what the impact of those demand changes would be on their bottom line, right? So
Yeah.
if you can predict the demand movement,
Mm.
then and you realize that all of a sudden your company is shrinking, for example,
Yeah.
you got to start taking costs out. Otherwise, you're going to generate a fair amount of negative cash flows. And negative cash flows, if you have a strong balance sheet and strong reserves, well, you can take the stress. But if you don't, and in the recession of 2008 or 2009, most people did it, right?
Yeah.
So if you don't do that and your business starts going down and you don't take costs accordingly,
Yeah.
you will run out of cash and eventually become insolvent. So yeah, so understanding cash flows is key. Securing credit facilities to the extent that you are credit worthy before you need them, right? Don't wait until you need credit to go apply for credit, right? Um, really pivot the business, right? We have a client that had a company running transportation buses, big corporate shuttle buses, and almost into insolvency. They had 200 employees, and all of a sudden, no one was working because their routes were not moving, right?
Yeah.
So what did they do? They converted their shuttle buses into mobile vaccination clinics, right?
Yeah. I
So
got
that
vaccinated
is
by one of them.
that's a pivot. You got to pivot. You got to redefine a company really quickly. Otherwise, the repercussions could be devastating.
So, as a CFO, you'd say one of the most important things are to first predict what's going to happen, and then if those things happen, be extremely dynamic.
Yeah, anticipation is power, right? So using things like projections and scenario modeling to anticipate, where earnings are likely to go and what are the things you need to do to impact those earnings, right?
Mhm.
So absolutely. I mean, I think that's one of the big parts, big jobs of the CFO is advising the CEO on resource allocation decisions, right?
When you were CFO, what do you think that one problem that, if solved, would dramatically increase your efficiency in the workplace?
Yeah, I think that's a great question in an area that has evolved quickly in the last 10 years.
Mhm.
Um, and I still see it today because Surfside Capital, we have a financial advisory division, right? So a lot of what we do there is provide fractional CFO services, right? So they'll come to us, a company can afford $500,000 CFOs in hours a month, right? So they come to get fractional CFOs, right?
Yeah.
We still see it today. Companies spend a lot of time gathering data as opposed to analyzing information, right? So this whole issue of business automation, streamline uh, accounting systems so you can get to business intelligence rather quickly is super important, right?
Do you think for analyzation of data, do you want a person there or would you try to have let's say, an AI?
Yeah, I think the artificial intelligence gets you so much. There's a lot of hype around AI, and AI definitely drives efficiency. But the more complex the analysis is, the less AI can do,
Yeah.
right? And that it's getting better with time. So 20 years from now may be different than today. But artificial intelligence is going to deal with complex analysis or people decisions or things like innovation, right? So
Yeah.
AI gets you only so much.
I've noticed that stock brokerages like Fidelity are now allowing smaller investors to invest in like fraction stocks. Do you think that a company
Yeah.
could create a platform in which they could use fractional investing for larger assets, like let's say housing?
Yeah, I think that actually it exists right now. I mean, I think that there's a bunch of asset classes, right?
Yeah.
Not just in real estate, in other areas, right?
Yeah.
That um, that very small amounts of capital get pooled to
Yeah.
acquire a much larger operation, right?
Mhm.
And um, and I think that's a wonderful thing to do because it allows the retail investor to participate in institutional size transactions, right?
Yeah.
Um, it's a great thing. You've heard of Robinhood and a few other platforms out there that are trying to just basically do just that, which is go after the millennial investor that doesn't have particularly a lot of money but likes to participate, right?
Yeah.
And they get fractional, fractional investments into something that ultimately becomes much bigger, right? So,
Yeah.
no, I'm a big fan of that.
As a CFO, what are the main factors you look at when assessing your financial strategy?
Um, so I looked at, um, does the company have a clear vision of its strategic goals, right?
Mm.
Because the financial strategy is a is secondary to that,
Yeah,
right? So which markets do we want to be into? Which products do we want to develop? What is our ideal customer? Which segments, right? Which locations? How do
yeah,
we attract them? Do we attract them digitally or in person? Is it bricks and mortars or you know? So once that gets ironed out, right? This is a vision. This is where we're going. This which markets we have a competitive advantage? What is our unique value proposition, right? What do we have that we believe provides a competitive advantage? Or maybe we don't have anything. Maybe we have a commodity. Well, okay, so if we're a commodity, how do we get more commodity volume, right?
yeah,
Once you answer those questions, the good CFO will go methodically, not only participate in those discussions and provide input, but also analyze, to be able to grow this company. Here are the various capital deployment activities that we need to be executing on. Maybe we should be investing in a sales and marketing organization. Maybe we should be putting this much money in product development. Maybe we should be hiring this person or firing that person, right?
yeah,
What is the recipe that is going to bake that cake, right?
yeah.
Uh, so that's discussions that are having between the CFO, the CEO, the head of operations that have to implement, the head of servicing that has to make sure those clients are happy, the head
Mhm.
of sales that have to go sell whatever it is that we're selling, right?
Yeah.
That management team is influenced by the vision and goals and objectives of the company, which, if supported by the right CFO, is going to be providing decision support to all the members of the management team, the senior management team, not just the CEO.
Got it. So as a group of the chief officers, you're all trying to find your strengths and weaknesses of that company and then trying to use them to help you and create a strategy.
Yeah, good CFOs have to be strategic partners, right? There are a lot of CFOs which unfortunately call themselves CFOs, but they're really chief accounting officers, right? And chief accounting officers are really important, right? They make sure that in front of the SEC, in front of regular, these are make sure that the internal control and those financial reporting is accurate,
Yeah.
right? Really important. But the difference between a great CFO and a great chief accounting officer is that the great CFO relies on the CAO or the accounting infrastructure to then go ahead and engage with some of the forward looking stuff, some of the innovation stuff, right?
Yeah.
Investor relations, product development, buying and selling assets, that type of strategy that we just talked about, right?
So it's not only you're not the accountant, you're the analyzer and you're also the communicator to everyone else.
Right, and the folks, yeah, but you need that accountant, right?
Yeah, no, definitely.
Right.
Yeah.
The other way of looking at this, you cannot be an effective CFO without a good accounting officer. Cannot, right? Because if the accountant is not right, everything gets screwed up,
Mhm.
right? You know. So
Based on the company you're working for, let's say the size of it, um, would you change how risky your plan is for that business?
um, I think size is not the right dimension, right?
Mm.
It's strength, right?
Yeah.
You could have a really small company that has a lot of cash in the balance sheet, right? So they
Yeah.
can take more risk, right? Because
Okay.
they have enough liquidity uh, to perhaps invest in more innovative products that may or may not work, right? A portfolio. Whereas you could be a giant company, Boeing, right?
Yeah.
And all of a sudden you're running out of cash, right? So,
Yeah.
so, so a company's risk tolerance, it's often um, best analyzed based on their strength.
Okay. Got it. So it's all about.
You cash or capital, meaning extra, yeah, you're more likely to take on more risks, right?
Yeah.
And generally, risks you take, you know, manage with the higher risk, high return, low risk, low return, right? So
Got it. So it's not about how large, it's about how much cash you have,
how strong,
how strong you are.
yeah,
And with those,
cash or access to cash, right?
yeah, like with the credit.
Yeah,
Yeah.
yeah. Well, credit, or if you were Mark Zuckerberg, 20 years ago or 30 years ago, right?
Yeah.
When he was burning, he didn't have a lot of cash, right?
Yeah.
Because he was burning everything that he got, but his revenues were going like this.
Mhm.
So it was such a promising company, Facebook, right?
Yeah.
That everyone, if he wanted to raise capital, right,
Mhm.
it would have been easy, right? So he knew that, right? So in that case, he didn't have the cash because he was burning it, but he had access to capital because he had a capital markets ready organization, right?
Yeah. So his future was so bright that he could create that capital. All right.
He could create that capital if needed, right? So he had no problem walking on thin ice.
Yeah. All right. Well, I know you have a meeting now, so thank you so much. This has
It's
been.
been great. It's been great talking to you, and I appreciate what you're doing here, and I think it's important that young minds um, think of finance as still a very attractive career, right?
Yeah.
Right now, we have about 25 clients in the Surfside Capital portfolio. Most of them are people of color owned businesses.
Mhm.
And there are smaller companies that when they got to us, they were a million, 2 million in revenues, but they needed to grow and didn't know how to grow, right?
Yeah.
And so we help them with strategy, with capital, with people, right? Buy, sell, focus, right?
Yeah.
And and we have a wonderful story of growth that we showcase all the time, right? So, um, number one issue that all of my clients are facing these days: people. They can't find the right talent for the things that they're looking for, right?
Yeah.
So you guys are in a good space, and I hope that you give it some thought and have fun in the future.
Yeah.
Great
I know.
meeting you.
I know a ton of young people will be inspired by this and they'll learn a lot. Thank you so much.
All right,
Great
great
conversation.
talk, yeah.